Welcome back to another explainer. I'm super thrilled to have you here today because we're tackling a topic that literally every single investor is going to face at some point, but very few people actually want to talk about it. We're diving deep into the psychology of investing during a market decline. I mean, when everything is going up, investing feels incredibly easy, right? You buy, the line goes up, and you feel like an absolute genius. But what happens when the charts suddenly turn red? Well, that is exactly what we're going to unpack today by looking at a real, documented strategy for accumulating crypto during a downturn. So let's just dive right into it.
I really want you to ask yourself this question right now. Be honest. What would you do if the asset you just bought continued to fall? Would you instantly start second-guessing your decisions? Would you just panic and hit the sell button because everyone else on your timeline is freaking out? Or would you actually stick to a predefined plan? It's a real gut check. And honestly, it's the exact dividing line between the people who survive in volatile markets and the people who just get completely washed out. So today, we're going to explore a mindset that chooses that third option, sticking to the plan.
To see how this actually works in practice, we're looking at TheAbrahamCryptoLand. It's a channel entirely dedicated to this investor's mindset. Now, just to be super clear right up front, we're strictly and neutrally examining their publicly documented strategy for this explainer. This is absolutely not financial advice, and we aren't endorsing any specific investment. Instead, we're just using their real-world journey as a lens to understand the mechanics of investment psychology when prices are dropping.
Check out the sheer volume of documentation in this extensive playlist. This isn't just someone throwing darts at a wall or, making a random guess on a Tuesday. By tracking their complete journey, they're proving that their approach to buying falling assets is a methodical, step-by-step system. It's a structured strategy built over time, and that gives us a really fantastic concrete blueprint to analyze.
All right, let's move into Section 1, the emotional trap, and why investors panic.
So before we look at the actual mechanics, we have to understand the mental hurdle that trips up like 90% of people. When prices are climbing, everyone is super confident. But when they fall, fear completely takes the wheel. The typical investor operates entirely on feeling. They buy when the market feels safe, which usually just means prices are already super high, and they sell when things look dangerous, permanently locking in their losses. But look at the systematic investor. They do the exact opposite. They accumulate during corrections and rigidly follow a predefined plan. The main takeaway here is that successful investing often requires you to do the exact opposite of what your emotions are screaming at you to do. Which brings us to Section 2, a contrarian mindset, changing the perspective. To actually pull this off, you have to fundamentally shift how you view the market. Think about it. If you buy a house for its great foundation and the housing market takes a dip, the foundation didn't crack. The actual underlying value is exactly the same. That's why I absolutely love this quote from our source material. The goal is not to predict tomorrow, the goal is to prepare for the future. This is basically the anchor of their entire strategy. If you try to predict the exact bottom of a falling market, you'll drive yourself crazy, and you're almost certainly going to fail. No one has a crystal ball. But preparation, that is entirely within your control. Section 3, the Linea Accumulation Strategy, a visual case study. Let's put this macroscopic philosophy under a microscope for a second. Looking closely at this chart, we can see exactly how this strategy plays out on a specific asset, the cryptocurrency Linea. Now, if you're a typical investor, this downward price action is pretty terrifying. It's flashing red warning signs everywhere. But notice the annotations on the screen. The creator of TheAbrahamCryptoLand sees this entirely differently. Look at those arrows pointing down at the trend. They actually label it strategic Linea buying, and note, I'm accumulating Linea more. They aren't running for the exits. They're viewing this falling price as a prime opportunity to gather up more of the asset at a discount, all because their fundamental belief in the project hasn't changed one bit. And that brings us to a really vital definition. What does it actually mean to accumulate? A lot of people seem to think investing is this one big dramatic decision where you push all your chips to the center of the table, hit buy, and wait to get rich. But this strategy defines accumulation as a slow, deliberate process. It's the act of building a successful position gradually. It requires 4 very specific ingredients: patience, consistency, risk management, and time. It's essentially a systematic, emotionless series of small purchases.
Moving on to Section 4, rules for risk management, controlling the process.
Now, I know what you're thinking. Isn't buying a falling asset basically just trying to catch a falling knife? And yeah, it is incredibly dangerous if you don't have rules. So let's break down the creator's exact framework to see how they control this risk. Rule 1.
Respect a 5% maximum portfolio allocation, meaning they don't bet the farm on one single coin. Rule 2, strictly no leverage. This is massive. Borrowing money to invest just dials the emotional pressure up to 11 and introduces unnecessary, ruinous risk. Rule 3, only use long-term funds. Seriously, don't invest next month's rent money. And Rule 4, follow the plan over market emotions. Having these rules written down in black and white is exactly what allows an investor to confidently buy when the chart is just bleeding red.
All right, Section 5, planning for profit, the exit strategy. Okay, so let's say the strategy actually works. The market turns around, things are looking green, and prices start going up. What then? Well, buying is really only half of the strategy. If you don't know when you're getting off the ride, you're eventually just going to give all your gains right back to the market. Look at this specific number, 0.00356. This is not a random guess. This is the creator's first predefined profit-taking level for Linea. Before they even finish buying, they already know exactly what price they need to see to start taking some money off the table. That level of specificity, that's what separates a professional mindset from a gambler's mindset.
And here's exactly how they execute that exit. When Linea hits that specific target price of 0.00356, the strategy dictates selling exactly 10% for profit, while holding on to the remaining 90%. Now, why only 10%? Because the goal isn't to sell everything at the absolute perfect top. Because remember, predicting the future is literally impossible. The goal is to systematically and gradually secure your gains while staying invested in case the price keeps rising. It's honestly just a beautifully balanced approach.
So, as we pull back and look at the whole shebang of what we've covered today, it really boils down to one core realization. The biggest challenge in investing isn't finding the right coin or hunting down the perfect opportunity. The biggest challenge is controlling your own emotions. The markets are always going to create these crazy cycles of extreme fear and extreme hype. A disciplined system is basically the only shield you have against your own psychology. Which leads us to this super powerful final thought from our source material. The market rewards patience, but only for those who can stay disciplined. You can be as patient as a saint, sitting on your hands for years. But if you don't have the discipline to follow your allocation rules, to avoid leverage, and to actually take profits when your targets hit, well, that patience isn't going to pay off. Discipline is the engine that actually makes all this preparation work.
And that leaves us with one final pretty provocative question straight from the source. By applying this disciplined, emotion-free accumulation strategy, can Linea actually become a 10x, 20x, or even a 100x cryptocurrency in the future? While nobody can predict what tomorrow brings, understanding the systematic rules used by methodical investors definitely gives us a fascinating lens to watch the market unfold. Thank you so much for hanging out with me for this explainer. Keep an open mind, keep learning, and I'll catch you in the next one.